That is right, baby. We are back. We're as back as can be. Um, I hope you're quite excited. We're going to talk about the most anticipated earnings of the week of September 21st. I'm not going to say last week was a little bit of a stinker, but it wasn't quite as good as this week. That's all I'm saying. We got some bangers here, and we will be talking about them and getting excited. Okay, so we're starting off Monday, as we love to do this far in the earnings season, and we talk about these Chinese companies, baby. No comment here as far as that's concerned. I care more about Tuesday, okay? Tuesday we got some good ones. Tuesday prior to open, you've got AutoZone. This is such a weird thing to think about. I don't necessarily know what this looks like for a company like AutoZone. Naturally, I think you need to anticipate the fact that EPS likely sees a decline. You would think so, right? It's hard to say that. So there are some counterbalances now that you see with everything going on right now. Naturally, they are occurring a lot more in terms of expenses, just due to the safety precautions they have to take in case they were ever to, work on a vehicle, anything like that. The increased expenses from, getting stuff shipped in to anything. It's out there. But you also see a little bit of a decrease in terms of wages because of the fact that really there's been a lot of furloughed employees. And I don't know if that's expanded to AutoZone, but I can assure you there have been hour cuts at least, cuts in terms of hours. So I do think EPS still finds a decline, though, in this year over year, just due to all those factors. From a revenue perspective, I don't know what would necessarily drive anyone extra into an AutoZone. So I don't expect anything weird in terms of that. I expect relatively normal numbers as far as that's concerned. But definitely you want to take a look at that line of EPS for sure. Then you have Neogen, biopharma company, not super familiar with them, and Aeritech as well. After close, you've got obviously the face of the go woke, go broke. What's that phrase? Get woke, go broke. Get broke, go woke. I don't know. It's something like that. I don't know what the term woke means. I do, but I also hate that it exists. Okay, I hate it. But Nike, weird company to see in this aspect, because if you think about it, with the line of traditional clothing companies, how they're posting this quarter revenue declines of 40% plus. Do I think Nike's going to be in that aspect? I don't think so, just because of the brand dominance. But I also do see people likely are going to be protesting this brand to an extent, just due to really social issues that they've been commenting on. And people just get that way. What your brand stands for actually means a lot for people, and you might lose customers that way. But I anticipate definitely over a 30% decline in terms of revenue for this company. It could be entirely wrong in that aspect, because I do think they have dominance in terms of the brand name and the fact that they likely can retain some of those sales online. You have to mention with these clothing companies, a vast majority of them are not doing the business they should be doing because of the fact that they just weren't open. Where they sell majority of their clothing, the stores were not open for a good chunk of this quarter. So online is the only way they're really able to carry over all that success. So very interesting to see that, and we will take a look at those earnings. You have Aurora, a little bit of the puff pass. Don't like these companies at all, so I care not to comment about the earnings. Because in my opinion, these stocks are still garbage. There's no real winners here. They're all just kind of, average players in the game with overvalued stocks. So that's my opinion. After then, we have Stitch Fix, which is one of my highlight stocks. Definitely an investment of mine, which is part of why it's a highlight stock. What can I say? But one I'm already up 50% plus over on. But regardless, you do need to mention the anticipated earnings on this company. What is expected from analysts is kind of rough. Expected negative 16 cents versus 7 cents a quarter ago, or a year ago, I should say. I mean, I get the aspect of that, but what shocks me is the revenue part of it. Revenue expected to decline 4% year over year this quarter, but for the full year expected a 6% growth. I just don't see it. I think with the lack of clothing shopping going on, I think people are turning to alternative routes. Stuff like a Stitch Fix. I don't expect massive growth, but I don't expect a negative revenue quarter, in my opinion. I could be wrong. I could be wrong. But just from trends that I've seen as far as clothing, and I will say, clothing demand, the trends have gone up, but I think this quarter is beneficial for them, so I just don't see that being a revenue decline, in my opinion. I see growth. I see single-digit growth, but if I'm wrong, you know what? Go ahead, give me a smack right on the head. Should have had a V8. KB home after them as well. Before open Wednesday, still some quality stuff here with General Mills. So this is the peak, what I would consider pandemic quarter for General Mills. It'll be in the majority of their hoarding demand for the first half of the quarter. So, I can tell you right now, people are buying cereal like no one's business. People love some oatmeal because it lasts 20 years. Could be beneficial for General Mills, but overall, the stock is incredibly boring. So I don't anticipate really anything special in terms of revenue growth. I don't anticipate any mega stock movement. It's just a boring stock. I'm sorry, it's General Mills. You get what you get. It's a good base to a portfolio, but you're not going to buy it if you anticipate high share appreciation. I'm sorry about that, but that's just kind of the way the market works, baby. It's a nice, consistent base to the portfolio, though. Love me a General Mills. Don't eat cereal, though, so nor oatmeal, or really anything they produce. But General Mills has a lot of products, You have Jinko Solar. I didn't know when they went from making jeans to transition into solar panels now, but it is an interesting, concept there. You've got 10 LTD. Cintas always posts some pretty decent numbers. Worthington, Centagen, and S&W. For A&W personally. Have a mean root beer and really a mean burger. First time I've had A&W. It's not their earnings, okay? It's not A&W, but first time I've had an A&W burger was probably a couple weeks ago. So I'm just saying, it was pretty good. After close, HB Fuller. Okay, Thursday's a banger, okay? It's a banger of a day, right? I can't wait for Thursday. So Thursday, before open, you've got Rite Aid. Think about a Walgreens-esque basic. Always was open during this quarter, so nothing to worry about in that aspect. And I think you can see a little bit of a benefit, obviously, just because of potential higher traffic. People trying to get stuff like, honestly, people are getting fewer medications. Just your generic over-the-counter items might be purchased a lot more at a Rite Aid, and whatever it might be. But I can tell you one thing not being purchased at a Rite Aid, and it is prophylactics, if you know what I'm saying. A lot of babies. What can I say? The COVID boomer generation is ready to be born. They're coming pretty soon. Hey, don't shoot the messenger. I'm just telling you what I know personally. There's going to be a lot of babies born in the months of December through about March. It's just kind of how it is. I'm sorry. After that, we have Carmax. Carmax is an interesting one to an extent. I don't know if I like it necessarily because I think they're overall going to see a decline in terms of demand because of car rentals it's an interesting one. I know for sure EPS line is going to be garbage. Should be. I'm not going to say that. I think it should be a decline year over year. Garbage is a rude word. I didn't mean it, okay? But it should be a decline year over year because of the fact that the amount of effort that has to go into cleaning a vehicle, from scratch, if they're doing the processes right, it's a lot of man hours. It's a lot of spent time as far as spent money in terms of the resources needed to be purchased for this cleaning. CarMax is interesting. The demand, I don't know if it's there necessarily either because, again, people aren't necessarily in the market for car rentals right now. You see with ride sharing how there's really no demand right now because no one wants to share a ride. Car rentals is a little bit different, but again, I think it's in a similar-ish category to where you see people that don't necessarily want to take the risk if they don't have to. That's my opinion on it. And with less travel, CarMax just, sees less demand. That's what I'm feeling. So after that we have Fact Set Darden, which I believe is the owner of a bunch of restaurants. I think that's what this Darden is, but I know they are, but I would need to look for sure at this logo. You have Accenture. You have a company that I don't know that it existed still, Blackberry. Okay, does Blackberry actually still exist? And what kind of numbers are they doing? Does anyone actually buy a Blackberry? I'm very curious though. If you look at a Blackberry phone, okay, let me take a look, and I want to see that. Oh gosh, I had to look because why would I not? Oh gosh, they still got the Motorola Razr, still $1,000, and it's a flip phone. It's a flip phone that looks disgusting. Oh gosh, I want to vomit. I want to vomit just looking at those. I'm sorry, I shouldn't have subjected you to that. Who buys that? Who buys that? Why is that a thing? Oh, it's ugly. It's so ugly. Okay, I'm sorry. I don't want to talk about Blackberry anymore. It makes me upset. It makes me so upset. Jabble. And after close, some good stuff. Good stuff after close, specifically because you see Costco here. Very, very highly anticipated from my perspective. You're expecting an EPS increase, and it's highly anticipated because of how retailers have been dominating this industry, by the way. Retailers have been dominating the market right now. 281 versus a year ago, 269. Full year expected to increase as well. But what I like is the sales and revenue increase that I'm expected. 9.5% expected this quarter. I expect a 10% comp personally. That's my perspective on the matter. But full year expected 8.2. But I expect a 10% comp this year, so I should expect a revenue beat. This company benefits quite a bit. I mean, it benefits quite a bit. People are hoarding. People are buying. They love a nice membership. Costco is the rare merging of a why can I not of a subscription and a retailer. I thought of the word subscription, I couldn't think of it, but they're a rare combo of that. So good for them, and I think they benefit from this overall. Working in the industry as well, I can just tell you, people are in demand for they're still in demand for merchandise. We saw a little bit of a dip, but we're seeing a rise again. People are just buying like no one's business. We have i2, Trip.com. I mean, you shouldn't expect anything but garbage from these people. Revenue declines probably 30+%, but I could be wrong. People might be going on trips. I know I'm personally not, and no one I really know has gone on many trips. Definitely less trips in general. People are getting canceled because they can't, do anything while they're on vacation. In certain states that are just completely blocking it. So, Trip.com, not expecting much. You got Vail Resorts, Clamp is what I would call it. It's a Clamp. But AAR, not as good as AARP. AAAA. Look, there's nothing more I hate than AARP commercials and their little jingle. It's awful and it makes me unhappy. You have Scholastic. You think of it, Scholastic just makes me think about elementary school again, back in the good old days when you did nothing besides cry when you scraped your knee playing kickball because you were trying to dodge the ball that someone was chucking at you, and you know what? You may have dodged it, but you still scraped your knee, and then you start crying like a little baby, and then you've canceled recess for everyone because you're a little crying baby. So shut up. Quit crying. You always ruin it. And Friday, AIH. Hope you enjoyed.